And we're live. What's going on, Simos? How you doing?
Good morning, my man. How are you?
I'm good.
Good morning, REC.
It's another segment of Brunch with REC. We took last week off from brunch, but you and I weren't off, and the team wasn't off. We had over 550 investors at a conference talking about what's happening in not only the Greater Toronto area, but in Southern Ontario, as well as what you and I do in terms of due diligence. And a massive, massive congratulations to the 21 clients of ours that got into the investment property at One Jarvis in Hamilton. Just a massive congratulations. I actually wanted to start right there because I think it's so big, right? How many people took action, tied up the property, went through the due diligence process. Out of the 21, there's, I think, 2 or 3 right now that are just finishing their discussions with the lawyers and all that. But just a massive congratulations.
Yeah, and there was clients that went into other investment properties as well. I mean, the specific property that we spoke about in Hamilton was an overwhelming success, and a huge congratulations to the developer and to their leader, Cash Bashutin from Emblem Developments. It's yet another development that they put together, and they literally sold out on opening weekend. So a huge congrats to them and to their leadership and to their foresight of really picking and choosing location and putting the appropriate product on the said property in order to attract that much attention from investors and end users alike. So a huge kudos and a huge shout out to the Emblem team. And we couldn't be more proud as strategic partners and brokers to be able to bring this to our community. So congrats to all parties involved.
Wanted to let everyone know what the agenda for today's brunch is going to be. We're going to be joined probably around in the next 7 or 8 minutes, maybe 10 minutes. As everyone knows, Simos and I tend to stretch the mic, so to speak. We're gonna try to keep it for the next 8-9 minutes. We're gonna be bringing on Mr. Clifford Fraser from Equiton, speaking about how you can invest your RRSPs, your registered funds, not just your RRSPs, but your registered funds in real estate. We're not talking about the first-time home buyers plan. If you ever want more information, or you have a family friend, you have someone in your family, you have a colleague or neighbor that wants us to discuss the first-time home buyers plan, please just send us an email, and the team, Tyler Tai, Laura Stewart, Bobby Pume, everyone's kind of on call in that sense to answer any of your questions. But today's conversation is going to be how to invest your registered funds into real estate, not taking it out. And so how that's going to be a massive discussion today. Obviously, we're coming around, the RRSP deadline's coming around the corner, but I think Clifford will let us know as well that doesn't really matter because it doesn't leave your RRSPs. But before we go into that, let's welcome everybody because everyone's coming all over the nation. Let us know where you're signing in from. It lets the team know that we're doing a good job. Thank you so much for always the ongoing support. But let us know where you're signing on from in the country, on the continent, in the world. I mean, last week we had someone sign in from Sydney, Australia. Like, how cool was that? Just to have someone from Sydney, Australia sign in. They wanted to get the information. So welcome to everyone in the REC family.
Amazing.
So let's talk about Simos because we generally get started. So are you seeing some comments? Because I don't see comments. So you wanna see?
I'm seeing it right now. I'm seeing people from Calgary, Hamilton, Kingston, Sydney, BC, Halifax. So we do have Carmen, Manitoba is Pat Reuter and Ken. Good morning, guys. It's such an honor to have you all here. And nothing gets us going more than, of course, seeing where everybody's logging in from. That's huge to us. And just to know that our commentary and our scope is relevant to you means the world to us. So I do want to ask that, especially when you are outside the Ontario market that we typically practice in, please give us topics that you feel may be even more relevant to you. So anything that you like, real estate questions that you want answered, we can always bring on an expert guest from those markets. We are extremely well connected across the nation with experts in every market. So if you do have something to say, by all means, please share it, and we'll do our best to get back to you at the earliest. And that's always via info@reccanada.com.
I'm seeing a. Oh, Simos, your audio just went out for a second. You want to just make sure?
Sorry about that.
There you go. Okay, awesome. I'm seeing a bunch of hearts and likes, guys. That's amazing for us, only because it actually helps let Facebook know that there's something going on, that there's a live event. So keep the hearts coming, keep the likes coming. It definitely helps what the kids call the algorithm. So make sure that you're letting us know, obviously, where you're signing in from, but the likes and the hearts mean a lot. Simos, let's jump into our real estate corner. This is how we start. For anybody who's new to Brunch with REC, every other Saturday, it's live on Facebook, 10:30 a.m. Eastern. And thank you to George Clark. He mentions like, oh, thanks so much, Jazz, Simos, and the whole REC team for doing these Saturday brunches. I think this is like 68th, 69th brunch that we're doing right now. But just so if there is somebody who's new, you know that it's every other Saturday live on Facebook at 10:30 a.m. Eastern. And we start with what we call our real estate corner. We let you know what's sold within our REC team, our 41 realtors in the past week. We hope, and let us know by the likes or the hearts, if this is a segment that you like within Brunch with REC, because our thought process is that when you know what's happening in terms of actual solds, now you know true value. Because there's a lot of rhetoric in the media right now that homes and condos are selling way more than value. Well, that's not true. It might be true in certain markets or certain properties, like one home that might have happened within in a certain market. But yes, they're selling for higher than the list price, but the list price is irrelevant. In fact, if they were all listed for $1 and a home sold for $1 million, we wouldn't say that it sold for $1 million over value. So understand that realtors, real estate agents, and their sellers market homes, especially in a market where it's a seller's market homes at a much lower price, because they want to attract more people coming into the home. They want to attract more offers. So what we want to do is give you true value. And if anyone's ever bought a used car before, now it's probably online, so I'm kind of dating myself, but there's something known as a black book value in the car business and in car sales, specifically when you're buying a used car. That is what tells us true value. And so in real estate, we always want to look at what properties have sold for. Don't worry too much about what they're asking, because in our opinion, the asking price is irrelevant. Why don't we get started, Simos? What's the first property? Where did it sell? How much did it sell for? And what was it?
Yeah, so we're going to start right off. Oh, sorry. I have a luxury home right off the bat. So this is a in Mississauga, Ontario, right off Mississauga Road. I have 2161 Oneida Court. It was sold by Peter Sony. He's one of our senior practitioners, and it sold for 2,420,000 on a list price of 2,495,000. So he was able to negotiate under ask on a property. This is a dream luxury property right off Mississauga Road, listed by our good friend Sam McDaddy, and that deal just firmed up a couple days ago. So this is a 4-bedroom, 5-washroom luxury home just off Mississauga Road.
Over to the east right now, talk about a 1-bedroom, 1-washroom condo, approximately 750, to be exact, it's 725 square feet, corner unit, 725 square foot condo in Markham, to be exact. Let me just make sure I get the crossroads here. Birchmont and Highway 7. Listed for $579, sold for $573,800. Again, not everything's going above list price, right? So just there's two listings that we just spoke about, sold by Christina Storga on our team. Days on market, 10 days on market. One thing you're going to hear a lot about as we go through the real estate corner every other Saturday, especially within the next month, 2 months, 3 months, that it seems like it's going to stick to a seller's market within the GTA, is that homes are not going to stay on the market a long time. Homes and condos. So that was 18 Uptown, Unit 217, sold for $573,800.
And then, of course, you have in Whitby, which Durham right now has less than a half a month's inventory, which means there is literally nothing for buyers to look through. There are far more buyers than there are sellers. So if we were to stop listing in less than 15 days, the entire Durham region would have nothing for sale. So to put that into perspective now, we're
Talk
looking
about that
at
really quickly, about the market, like that being one of the biggest market indicators, man.
Yeah. So of course, when we speak to absorption and when we speak to months of inventory, anything between 0 months to 3 months is a complete seller's market. 3 to 6 months worth of inventory in the market, you're looking at a balance depending where in that cycle you are at. And then 6 months plus of inventory, you are definitely getting into buyer market dynamics where a buyer can really pick and choose, have definitely a whole lot of clauses to their benefit, as opposed to the market that we're in today, where the buyer has to literally be so prepared from a finance perspective, do all the grunt work up front at a risk of them spending money on a home inspection and not getting the property. Meaning that if you're a buyer in this market and you look at a home, you know you're going to be competing for the same home with other buyers. So any and all due diligence you have to do has to be done upfront, quickly, and efficiently in order for your broker to be able to negotiate a successful and winning offer.
And
With
really
that being
quick,
said,
I was going to say, sorry, Simeon, really quickly, for anybody who's watching right now, if you would like us to go in depth on strategies on how to win in multiple offers, maybe it's not you that's thinking about purchasing a property right now, but you have a friend or a family member, just throw up a like or a blue like or a red heart to let us know. And one of our segments in the next upcoming brunch, we reverse engineer stuff here. We're really lazy in that sense. You tell us what you're looking for, and we're going to do our best to reverse engineer it. In fact, for anybody who's just coming on late on Brunch with REC right now, we're going to be speaking with Mr. Clifford Fraser in the next coming minutes about how you can invest your registered funds within real estate. That came from a bunch of emails that we were getting at info@reccanada.com that wanted more in-depth strategies and tips to invest those registered funds. And so hence we just reverse engineer it. Please let us know if you would like us to go over the way to win in multiple offers. Just give us a blue like or a red heart. Let's see the screen light up. Simos, you were speaking about this Whitby property, buddy.
Yeah, so 120 Fernbank. We are talking about Whitby, which is probably the highest price of all cities in Durham. Whitby commands a higher price than Pickering, Ajax, and Oshawa, which are the four major markets, including Whitby. And in this case, it's well sought after, beautiful detached home, 120 Fernbank, listed for $839, sold a little over $980,000. So properties in Whitby are approaching that $1 million mark. And that was done by none other than, again, one of our very senior guys, Mark Alban Carter. Mark is a career negotiator. He's been in sales for 35 years plus, real estate almost a decade at this point, and he's just a beast. And he'll go in there, and I'm sure he was. I can only imagine how many offers were on this home, but he got it wrapped up for his client. So big kudos to him. And now going back to value, now you're seeing this home should have probably been listing at $929 based on comps, but it was listed at $839 to widen that net, as you were saying earlier, and bring that action. This home, including today, is its fourth day on the market, and it's already been sold firm.
And just to talk about the psychology, right? Why agents and their clients, sellers do this is because on the flip side, buyers, if you can picture buyers sitting at home online and they're having a glass of wine looking for listings, and one of the partners says to the other, honey, oh my God, look at this home in Whitby. It's listed for $839,900. It's under $840,000. We can afford this because that's what our mortgage broker told us. Let's go take a look. They go take a look at it. They actually touch, see, and smell the home now, start to fall in love with it, start to see their family grow up in the home. And now it's like, let's put in an offer. And what happens is their max was probably, call it $850. So they put in an offer at $850. The home is worth $970, $985, like in that range. But what that couple just did now is help the seller with one extra offer on the table. And so instead of having 5 offers, maybe now they have 10 offers, and that starts to drive up the price. But because I saw the chat, Simos, I'm not sure if you saw it on your end, buddy, but I saw it lit up. So let's make sure we make a note that we are going to, if not have the whole brunch in the next coming weeks, at least a segment. We're going to bring on one of our team members, and I'm not setting this up, but actually our next listing that I'm going to go over, it'll probably be that team member that we bring on, Jennifer Popol, because she deals with a lot of our clients in this specific strategy, which is multiple offers, setting it up on the seller side for multiple offers, but also helping buyers on how to win in multiple offers. There is 6-7 things that you can do, not to guarantee that you're going to win, but definitely stack the cards in your favor. And her listing that she just sold was a 2-bedroom plus den with parking in Liberty Village. I love this area, 59 East Liberty. The building's probably about 3 years old or so. 2-bedroom plus den, bigger building, corner unit, 969 square feet, sold for $895,000, and sold with under in 3 weeks' time. So even in downtown core, that's the one place in downtown Toronto. Simeon mentioned the buyer's market, balance market, seller's market. I think it's fair to say right across Southern Ontario, in majority of markets, we're in seller markets, which again means that there's a lot more people looking for homes than there is actually inventory. But the one place that I still think is on sale, like, yes, real estate is on sale in downtown Toronto for condos. We know that because there's a lot more listings than there is buyers, and that's determined by the indicator of months of inventory. So, I mean, did you have any other listings that sold on your end? Because I'm done on my side, so I want to know if you had something that I might have missed, brother.
There's definitely a couple of listings, but I just wanted to put a comment quickly just to that listing that Jennifer just sold and to your comment that it's on sale, because that window of opportunity is closing. And this is a time that I will tell every single one of our REC Nation community members to really pay attention and see if you have the ability to get a mortgage right now, if you have the ability to look at a downtown Toronto condo, you are literally less than 30 days away from that window closing. The minute that this vaccine and this whole recovery of the downtown core correlates with the airports, universities reopening, and everything else, we're seeing. So Jennifer just sold at 99.9% of list at $895, whatever that condo was in Liberty Village. What was the price again, Jazz?
$895. The sold price or the list price? Did you ask me for
the sale price?
Yeah, $895.
$895. So the condo is $895,000 for a 968 square foot condo. So just under $1,000 a square foot. We know as a fact that new construction right now, for the developer to be able to bring a project to market, has to sell in that same corridor for around $1,300 a square foot, or else they would go bankrupt. That's the cost of land, the cost of construction, and everything else, which is an indicator again as to where the values are going based on demand. So right now you can get resale at just under $1,000 for a bigger unit. The smaller units are going for just above $1,000 a square foot. But understanding that you're going to have a huge delta to gain from over the next 2 to 5 years. So if you are able to get into the downtown market of Toronto in the next 30 to 60 days max, you will have a massive delta to pick up on. And we are definitely looking at opportunities right now for many clients in the downtown core. And of course, we always have our eyes open for ourselves as well as opportunities come along.
And important to mention that you just have to be like, as an investor, you just got to be okay to stomach a little lower rent for a bit. Like I think that's very important to mention so people know what they're getting themselves into. But the amount of rent that the rent that's going to, when you compare the rent from today to what it was pre-COVID, yes, you're going to get less rent, but you just got to stomach that for a little bit. I'm talking about 6-7 months, maybe a year. Let's just call it for a year. But the amount that you're going to make on the passive appreciation because you're buying it for less is a lot more. So you're going to net out a profit, but you got to have the stomach for it. And we can definitely help in terms of renting it out for you, finding tenants, and help with the management. We kind of make that process very easy. But Simos, you did mention that you had another property or two. I want to make sure we're respectful of the CEO of Equiton, Mr. Clifford Fraser's time. So why don't you quickly go over those listings, brother?
Yeah, so our commercial division just sold a couple of, so that's our vice president of the commercial division, Jacob Campanero. He has negotiated an entire development out of Bluffs Bay. And these are waterfront lots and water view lots as well. A couple of the waterfront lots were just picked up on Bluffs Bay, beautiful acre sites for around the $500,000 mark, some at 465, some at 525. And these are going to be home to 3,000 square foot cottages directly on the water. Those are beautiful. And also that development, I'm very proud to say, we have engaged talks with Princess Margaret. We're hoping that we're going to have a dream cottage for next, for I believe the fall's draw or next spring's draw with Princess Margaret. So we're hoping to really get them involved in there. And of course, that would be in a very special and deep discount to them. But having a Princess Margaret credential and making our contribution to the betterness of everyone, and of course, the fight against cancer would be really cool.
Awesome. Let's bring on the hands. And you know what? For the first time, there's going to be 3 bald guys now on screen. I love it. The handsome Mr. Clifford Fraser. Clifford, I said COO. Did I make a mistake there? What's your title there? What do you do with Equiton now, my man?
I used to be the the COO, but now I'm the Chief Business Development Officer. So I think they just wanted to give me a couple extra letters and another $2 or $3 a year. And
why not?
Yeah.
Why not? You deserve it. You've been helping and doing a fantastic job with our clients for the past couple of years that we've been working together. The relationship couldn't be any stronger. So we appreciate that you treat our clients with white gloves on. And Tyler, I know, is very happy as our air traffic controller as he goes back and forth with your team and makes a lot of introductions. We'll let everyone know how to get in touch with Equiton. We would love to be kind of your liaison and concierge that for you. We essentially remove the friction in making sure that you get in touch with the right people at the right time whenever you're ready. So to you, Mr. Clifford Fraser, I mean, RRSP deadline is coming around the corner within the next couple of days. What does all that mean for a client?
Well, it's a busy time, obviously. Even some of the other partners that we work with, call me on March 1st. We don't have time. We don't have time. So it's a great time to get involved in real estate. And I joined in a little bit earlier and listened to what you guys were saying. And I can only kind of echo the comments that you made about, things being on sale and a great time to get into the real estate market. But in some markets, you do have to kind of, as you said, stomach a little bit of a, lower rents, or something's going to take a little bit longer. But, what we say here, at our shop is, real estate is get rich slow. And certainly in, the market that we're in now with COVID, the rollout of the vaccine, it's kind of really highlighted that real estate will continue to move. It's not moving, in certain markets, it's not moving at an exponential rate as it has been in the past, but it's still moving in the right direction. And so it's just a matter of sitting tight, but making the right decisions and buying the right assets in the right market. So, using RSPs, there are certain investments that, people didn't have access to before, and real estate being one of them through their registered funds. So it's a great time to get involved in the asset class and put some of that put some of those assets to work, because, traditionally in Canada, registered plans, they're invested. I don't want to disparage any, one particular investment type, but, there can be a lot of junk out there. And so if you're not getting the returns that you want, and not getting the returns that are going to keep you, as I say, keep you out of cat food in your retirement years, then, putting it into real estate is a great way to do that.
Clifford, I have a couple questions for you, my man, and I really would like you to go into. You guys run two major funds.
Correct.
And that is a yielding fund and a growth fund.
Mm-hmm. Correct.
Can you please? Yep. So what I would like our community to hear from you is, first and foremost, how does one invest their RSPs into real estate? What's the actual practical way of doing it? And number two, the difference between two major funds. Like Equiton has a tremendous track record. You're a very conservative ship. And you're a ship that actually offers a yield, an income, to someone who would choose that. So can you take our community through the process of where to start? So I have an RSP with, let's call it, one of the major banks. Where do I start? What do I do? And how do I make a choice? What's the best option for me?
Okay, perfect. So that's a great way. So let me back up by saying that prior to 2016, most investors in Ontario, actually all investors in Ontario, weren't able to invest their registered funds into private real estate offerings. It was really only available to accredited high net worth institutional investors, so rich folks basically. So if you didn't fall in the rich folk category, you couldn't invest through your RSP into some of these private securities. Now, not all private securities are created equal. They are different. They are different in their structure. They're different in the way that they are run. And obviously the risk and reward can be different depending on what you're getting involved in. So I think the first thing that, that someone that wants to put their RSPs to use needs to determine is, what kind of real estate do you want to be involved in? Do you want to be in income producing real estate, which will, give you a steady flow of income? You'll get a little bit of growth, but, it's not GameStop. It's not, crypto ETFs. You're not going to make $1 trillion on it at the flip of a coin kind of thing. So if you're looking for something that is steady Eddie, just gets you on base every month, every year, and it will grow, and you want to protect that income, you want to protect that capital, you need to then determine what's the most appropriate real estate asset for that. And not, as you guys know, I'm preaching to the choir, not all real estate is created equal. So if you want income and cash flow, then for us, what we like to invest in is essential commercial real estate, which is, in our space, it's multifamily. So, we think that is, especially during the pandemic, it's demonstrated, it's resilient. It's always been a very resilient asset class, but during COVID, we've seen it, that's been proven out again. Then you have, true commercial, so industrial, mixed use, office, retail. Some of those have done really well. Some of those have not done really well. If you own a strip mall that's got a beer store, a liquor store, and a grocery store, and a pharmacy, you're probably doing okay as a landlord. But if it's got the hair salon and the gym and the movie theater, you're probably feeling a bit of a pinch right now. Industrial is another sector that people can get involved in. I can go on. And then obviously there's lending and development too. So they all behave differently. So it's very important for you to understand, how they behave and the relative risk and reward from each one of those. So having said that, so who can actually invest? So in Ontario, if you're investing in a security, a private security, so what that means, it's It's just like a stock or a bond or an ETF, but it does not trade on the Toronto Stock Exchange or the S&P or anything like that. It's a private market security. So you're limited in how you can, get in and out depending on how the particular investment is structured. But if you're not looking to kind of, flip your investment every single day, which, as I said, real estate's get rich slow, you really don't need that kind of instant liquidity. There's certainly really good real estate investments in the public market, so public REITs that you can invest in, but they move with the rest of the stock market, so it's it does this. And if you don't want that volatility, then privately is a great way to get invested in real estate. So in Ontario, accredited investors, we've had that category for a very long time. There is another category called the eligible investor. So I'll just run through like 3 quick stats, and that's how you determine whether you're an eligible investor. So you either make more than $75,000 on your own, more than $125,000 as a household, or your net worth is greater than $400,000. So that's a lot of people. A lot of the investor population will fall into that category. So you are able to invest up to $100,000 of your registered funds, or even cash, if you have cash sitting, under the kitchen sink. You're able to put that to use in private markets. So that's the hard limit that you would have if you fall into that eligible investor category. If you're a non-eligible investor, so you don't hit that 75, 125, $400,000 threshold, you're still able to invest. It's just that you're limited to $10,000. So these are rules that the Ontario Securities Commission has put into place with respect to these private. So when we talk to the REC family, that's the kind of triage or questions that we go through to see, what would be most appropriate for you, because there are lots of funds out there that say they'll take all your money and it's not appropriate. So it's really important to go through that because it limits your risk and limits your downside, and it needs to be suitable for people. So that's how you qualify. Most banks will not allow you to hold private securities in your self-directed RSP account or your Wealthsimple account or whatever it is you may have. So we work with 2 really reputable firms to create a self-directed account for you, whether it be Lyra, RESP, TFSA, what have you. So we work with either Olympia Trust or Computershare, and they will create that account for you. So it's just having another self-directed account at another financial institution. So that's kind of it in a nutshell. So understand the kind of asset that you want to get involved in, what kind of whether you want monthly cash flow or whether you're just happy with growth and getting a return at the end, and then determining based on your financial position, how you qualify and how much you could put in.
Insiders all over the country. If someone's in Alberta, if someone's in BC, someone's in Quebec, is there any restrictions with investing with Equiton?
No, there isn't. So the rules around the qualification rules are fairly similar province to province. There's slight differences. Ontario actually was kind of the last one to get on board with this. Surprise, surprise. It took them forever to figure this out. So this private capital market, it really did start out west. It started years ago there. So we finally caught up here in the center of the universe, whatever. In Quebec, for example, there is one slight restriction in Quebec, and that really depends on whether the investment that you are looking at is available if all the documentation, whether it be legal documentation and marketing documentations, are available in French, then it is available to those 3 investor categories: the accredited, the eligible, and the non-eligible. If the investment that you're looking at is only available in English, then in Quebec, you have to be an accredited investor to be able to get involved in that. But our funds, one of them is available in French and one of them will be available in French soon, but not just yet. So it's not fully restricted at our shop.
It's not as easy as just throwing it into Google and translating all the documents. It might be a silly question, but
No, you're right. Like, I mean, you can call your broker or you can go onto Wealthsimple and bet it all on black, and no one's there to stop you, right? But with private markets, they put in these restrictions to make sure that it's suitable for people, and to make sure that the people creating the funds don't kind of put their arms around you and take all your money.
So we understood a little bit about eligibility, meaning how does one qualify? Is this right for me from a high level? And what I will do is, upon completion of this morning's brunch, I'm going to make sure that you send us a couple of links where people can just go back and refer to those eligibility parameters. It just so they can kind of self-gauge themselves into a few things, and see if it's right for them. But my next questions for you, Cliff, is what would you say are the top 3 advantages of diversifying into a private real estate fund, whether it's Equiton or there's a number of others that are very well managed and ran. And we know so many great people in this business, and you being at that top echelon is why you're here, because you guys run such a great ship, and we're so proud to be your partners. So what I wanted to hear from you and really dive into our community is, why is it a good idea to take some of the RSP that's been performing? Like, some people saw that nosedive of 40% in the beginning of the pandemic. We're so fortunate that it climbed back up.
Yep.
But do we see dips and valleys like that when we're in multifam? We don't. So I want you to take us just from with your words, from your vision. Why is it that we so strongly believe in it, and how can we portray that? Because you're not a salesman, you do business development from Equiton. So I want you, from your vision and from your perspective, what do you see the greatest benefit in putting your back end as an investor, your RSPs, into a private real estate fund?
Great question. So a couple of things, getting involved in active real estate investing, whether that be flips or that kind of thing, is a great way to make money in real estate. Real estate has been, on a tear, and God's not making any more land, and there's way more demand than there is supply. So I continue to see, real estate being a healthy way to invest, passively versus actively investing. So, investing with someone like us or another kind of fund like ours, that would be passive investment. So you are kind of outsourcing the finding of the assets, the running of the assets, to somebody else that is an expert. I consider ourselves to be experts. So the nice thing about doing that is you can diversify and spread your risk out and get access to the efforts of a organization that is compiling and pooling together a lot of assets, far more than that you can do on your own. Certainly in active real estate, if you do it right, if you time it right, you can make more money, but it will be taxed immediately depending on the kind of investment that you're in. Whereas this is passive. My pool of our flagship fund, which is our multi-res fund, we've got 1,036 stores in the portfolio right now. So for most people, unless that's their full-time day job, they're not going to be able to acquire, run and improve 1,036 stores on their own. Plus, they probably wouldn't have the cash to do it. So you will get, instant diversification. You get the stability, and you get to partner with a professional investor who, you just may run out of time, talent, and money and not be able to do it on your own. So why not use us and leverage our skills? We can borrow, for instance, to buy these properties at a much lower rate than a single investor can. To give you an example, we just completed a purchase at the end of 2020. It was 10-year fixed rate money, CMHC guaranteed, for 1.9%. So it was basically free. So most people don't have access to that kind of that kind of funding from their bank. So and that was I can't remember how big that purchase was, $20-something million purchase. So we're able to do these things at scale and take away all the headache for you. So you can concentrate on your flip property, or you can concentrate on your your fourplex that you want to run. You don't have to worry about us if 3 people in one of our buildings decide to leave, because we'll just take care of that. We'll re-rent it. We monitor market rents. We jack up the price, so that return just continues to come to you. And it's not, this is not about taking all of your money and putting all your eggs in one basket. This is for a portion of your portfolio that you want to protect, and that you want to be able to sleep at night because X% or X dollars of my RSP it's just not going to flop around. I don't need to worry about, a president tweeting. I don't need to worry about a subreddit causing, my portfolio to tank. It's just going to continue to perform based on, the fundamentals of that asset. So we take the time to understand the fundamentals of the asset. We take the time to invest in the right communities so that you don't have to, at least for a portion of your portfolio. Does that help?
Simos, does that answer your question?
It answers my question fully. I compare it. The comparison that I found is that it's kind of going down the line of an ETF or a mutual fund where you're investing in the manager of the fund. You're investing in the pro behind the vision. If anyone has the time today, I would strongly recommend that you Google Equiton, you Google their performance, you spend some time on their site, and you spend time online looking at other people's opinion of them. They have a spotless record. They've been performing at a high level, which is why we have chosen to work with them. We believe in their management, and I personally have funds in the care of Cliff and his team. So it is a company that I like a lot, and I like what they do. I have actually worked with them to try to sell them property before, and it didn't make it through their due diligence. Funny enough, so they're a very, very good, careful, and conservative group. Good for you guys. Jazz, on to you,
Thank
pal.
you.
Go ahead.
Sorry, one other thing that I should mention, thank you, is depending on the kind of investment that you get involved in, there can be some very, very significant tax efficiencies that you can pick up. So, for instance, if you, so let's just say you've got cash set aside, but for whatever reason, it's not enough to make the acquisition that you want, whether it's a multifamily, whether it's single family home, an investment property, whatever it is. And so you want to put that cash to use in real estate. Some funds, ours in particular, they happen to do this. The returns that you can generate out of these funds for cash investing, so non-registered investing, can be tax deferred if the fund is structured correctly. So for both of our funds, any of the returns, if you're investing non-registered money, is 100% tax deferred for tax purposes. So the money that you receive every month from your distributions, you don't pay any tax on it today. That tax is deferred, and it will likely be capital gains. So you pay it when you sell out of the fund at some point down the line. And so that's a real clever way to put funds to use. So if you're maxed out, if you're lucky, you're maxed out on your RSP, you're maxed out on your TFSA, and you don't just want to have this money languishing in a crappy GIC or something like that, you can put it to use in a passive real estate investment and get tax deferred treatment, which we find a lot of professionals that have professional corps that want to invest through the corp and sort of shield and defer some taxable income. Great way to do that as well.
Couple of things I kind of wanted to circle back to. You mentioned not putting all your eggs in one basket. You correct me if I'm wrong, Clifford. I mean, the fact that it's the fund and Equiton is regulated by the Ontario Securities Commission. You can't put someone's eggs, all their eggs in one basket.
I would say, depending on your financial position, how much debt you have, that kind of thing. Generally speaking, you don't want to have more than 20 or 25% of your net financial assets. So that would be your liquid assets, your cash, your investments, your pensions, that kind of thing. You probably don't want to have more than 20 to 25% of your net financial assets in private investments. So not necessarily us, but just kind of private investments in general. But that would be something that is very specific to a particular investor. So we would go through that kind of qualification to make sure that it is appropriate, because you're right. We have to satisfy the OSC in terms of what is appropriate and what is suitable for an investor. And, you never want to create excessive exposure for an investor, because, life happens. They may need to get access to the money, and private investments aren't instantly, you can't just sell them instantly. You can't call your broker. You can't just hit sell. So it does take time to get that money. So, we need to look at each individual investor's liquidity and to make sure that it's appropriate for them.
You mentioned the word
and we have
returns.
we have turned down.
Right.
We have turned down investors say this is not appropriate for you.
Well, I love that. Like when we make introductions sometimes to you guys, you'll come back and let the client know that you can't do this investment. For me, for somebody who made the introduction, who had to go out on the limb and make that introduction, to hear back that they couldn't make the investment because it wasn't right for them in their portfolio or they didn't meet the criteria, that actually makes me feel really good. And I can tell you feedback directly from our clients and our REC insiders is the exact same, because you know someone's watching over. You know that you're not trying to just, you have 100,000 in RRSPs, we can take it all. That's not the conversation that's going to be had. In fact, I do want to touch on that in before we let you go in terms of what the actual process is like. But I know everyone who's watching right now is probably sitting at the edge of their seat and saying, we heard Clifford say the word returns. What is the returns? And I know you guys are very, very ultra conservative. I'm not trying to put you on the hot seat, but just your track record, maybe what are you comfortable in terms of talking about? Because I know if you leave it in your bank, you get a very high interest rate in your RRSPs. I hope everyone caught that. That was my joke for the day. So it's obviously anybody who's watching this who's thinking about perhaps taking it out of the green bank, the red bank, the blue bank, and not that they're bad people, but at the end of the day, they need that money so then they can lend it out for mortgages. Let's talk about what are kind of your returns that you quote clients.
Yeah, so on our apartment fund, which is our flagship fund that's coming up on its 5th birthday next month. So that has always had a targeted return of 7 to 10% total return. So that is a combination of monthly cash flow as well as the share price going up over time. So we're very, we're comfortable with that. I want to under promise and over deliver because I never want to have a conversation with a partner like you guys or an investor to say, ooh, we made a mistake and we got to cut the returns, or ooh, we're going to close the fund and you can't get your money out. Like those kinds of things happen. And that's part of the risk of investing in private. So that's why it's important to, invest and partner with people that you trust and people that you think will take care of your money and do what they say they're going to do. So, for us, the proof is in the pudding. We've had, we're coming up on sort of 60 months of increasing and positive returns, never had a negative year. So I think last year we're tracking in sort of the 8 to 9% total return. So, it's not 20%, it's not 25%. As I said, you're not hitting a grand slam every time, but it's steady. It's just continued to increase over time. If you don't need monthly distributions, if you don't need that monthly cash flow, you can reinvest and get a 2% discount. So you get, free shares every month, as it were. So that helps with compounding. So it's a great way to, to just kind of shield a portion, as I said, shield a portion of your portfolio and let it grow, and you don't have to worry about it. Our second fund, slightly riskier assets. It's not just it's not just multifamily. It is essential commercial real estate. So, it is, we don't have any office or retail in the portfolio. So we're protected that way, but it's income producing assets that aren't multifamily, as well as it does real estate lending. So large scale commercial lending, as well as real estate development. So slightly higher risk, but it's a one-stop shop because you get access to three different real estate classes under one roof. The nice thing is you don't have to also worry about, when one of the Equiton mortgages in this balance fund, which is our second fund, in the balance fund, if a mortgage matures, what do I do with the money? Well, we take care of that for you. You don't have to go and redeploy the money. We'll go and redeploy the money. Same thing with a development. When we have a development that completes, if you want to take the money, you can take the money, but we can then reinvest it into another development. So that's got a higher targeted return of about 8 to 12%. And so I think last year we hit about 11% in that fund.
Well, we all know who won the race, right? The tortoise or the hare. So I love the slow and steady. It's what we believe here in REC Canada. Yeah, with income properties, which are totally different than what we're talking about today. Yeah, you're going to see your 28, 29, 30%. Simos and I talk about this all the time with our clients. Like, even if it was just 8%. Compounding year over year over year, we'll take that. The 25 and the 28 is like a massive bonus, and so love that. You're also ultra conservative.
want to remind Jazzy, when we look at the Toronto market and we talk about it doubling in value every 10 years, that return is a compounding 8 to 10% return. So when we're talking get rich slow, we're not talking about waiting a century. We're just talking, it's not a get rich quick scheme. Everybody has to realize that real estate, as to quote Clifford, God's not making any more land. Mm-hmm. In the GTA, we have a massive body of water, whether you're north of it, south of it, depending where you are in that golden horseshoe. Regardless, we have a big body of water. Typically, all big cities are sitting beside a big body of water. New York, Los Angeles, Chicago is on a Great Lake. All of these centers are typically on the water. So one side of them build on. On the other side of the GTA, we have the green belt, we have the highway structures, we have all these restrictions that limit the supply. So as we go through and we try to get through the red tape and through the development process, companies and corporations, just like Cliff and Equiton, just like other partners that we have in that space, look carefully day and night to pick the best assets, the best value add assets, the best performing assets, underperforming assets that they can easily turn over in order to be able to centralize, pool, and use the power of many to make the common goal of winning in real estate true for as many investors, including themselves, as possible. I think that kind of really puts the nail in the coffin as to what we're trying to do with these funds. Cliff?
Yeah, no, you know what, and I listened earlier on to what you guys were saying about, the GTA being on sale. And, one of the things that we've had to kind of clarify or myth bust, if you will, for some of our partners is, oh my God, rents are going down in Toronto. Well, yes, rents have been going down in Toronto. There's a little bit more competition depending on what pocket of Toronto you're in. But turnover rent, so for those that aren't familiar, which I'm sure everybody is, but turnover rent is when an existing tenant leaves and a new tenant comes in. As a landlord and as an apartment owner, I can now charge market rent. I don't have to continue with the previous rental amount that was in place. So turnover rent. So, okay, Toronto's not going up by 25, 30, 40% turnover rent, but it's still going up by 8, 10, 12, 15%. So it's still increasing. You're still, as a landlord and as an investor in our fund, you're still making more money. You're not making as much as you would have pre-COVID, but as you said, there's a sale on right now. And, once everybody gets the vaccine, once everybody comes back, people are going to rush back to the GTA because that's where the jobs are. That's where, the entertainment district is. That's where people have their life. They're going to want to come back, and those sales are going to be gone because they're going to be gobbled up by the really astute, either, tenants or investors who are going to grab stuff now while there's a sale. We saw that in 2008. People were panicking, but those that were well capitalized and had money to deploy, there were bargains to be had. Just like in March, if you when the stock market crashed, if you stayed put and you continued to buy more Tesla or more Amazon or more Peloton or whatever it was, you will have seen an exponential rise through 2020. So it's all part and parcel of the same machine, whether it be single family or multifamily, like what we're involved in real estate.
A lot of questions coming in the comments. I'm trying to just kind of keep an eye on those. We'll get to a couple of the questions just so we can be respectful to Clifford's time. But if anyone wants to be connected to the Equiton team, we make it really, really easy. It's why we have Clifford here, because we make sure that he provides the white glove service when you're coming from the REC family. Shoot a quick email to info@reccanada.com, and you can just put the subject line, introduction to Equiton, and our boy Tyler Ty Walburn, our air traffic controller, will make that all happen. I kind of want to come back full circle because I know there's somebody who's listening right now, either live or to this recording that comes out in the next couple of days. Can you just walk us through again the process, right? Because I'm seeing some of the questions in the comments, so I think we need to take a little bit of time and go back, if you're okay with it, Clifford. So if I have my money sitting in the bank right now in an RRSP, what does Equiton do for us? Like, do you set up everything with the Olympias and all that? Like, do you take care of everything?
We take care of everything. So what we would go through that that suitability process to find out what's the most appropriate amount for you to invest. Then we would figure out, okay, do you want some door number one, door number two, or a little bit of both, so, in terms of the funds that we offer. And then we will then figure out, okay, where are you going to move the money from? So if it's from, as you said, the red bank, the blue bank, the green bank, whatever, we take care of all of that. So we will create that RSP account for you, or the TFSA account with either Olympia or Computershare. Some have a preference, some don't. It really depends on what other kinds of private investments you want to do. We create all that opening the account paperwork, and then you just tell us where the money needs to come from. And so then if you say, okay, I want to move $50,000 from my RSP at TD over to Olympia Trust, all we do is get the account information from where your money is at TD. We fill that out in the Olympia Trust paperwork. We send the paperwork over to Olympia Trust. We do it all via DocuSign. So, you can be in your pajamas on your iPad and you just click, 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 and you kind of approve. And then Olympia Trust takes care of everything with TD or whoever your institution is. So you don't have to do anything. You don't have to call a broker. You don't have to call an investment advisor at the branch to say, oh, I need to move this money. If that $50,000 is in Apple stock or whatever, then you say to us, okay, I want to sell the Apple stock to create the cash to buy the Equiton investment. So it doesn't create a tax event. Sometimes people think, oh, so I'm taking it out of my RSP and then putting it in another RSP and then buying Equiton. I've got a lot of hands going here today. No, it's not that. It is just you're going to sell your GIC or sell your mutual fund, which we can take care of those instructions for you. It then sits in cash, still within your RSP or your TFSA, and then it will then buy Equiton. So your new TFSA at Olympia will have Equiton in it.
Anybody who's watching, you see all the comments right now. There's been tons of insiders that have already dealt with Equiton, and you guys are getting glowing testimonials. Not sure if you see it on your end or not. Make sure you let the team know. Simos.
For me, my man, there's not much to this. I thought it was timely to have this discussion. I think it's a very important part of every investor, and this is not just real estate investor, but every investor to have a well-rounded portfolio. My thoughts are everybody needs to take the time to research it properly, to do their own due diligence. We're here to kind of open people's eyes to something new. And if you're already in the space, to introduce you to people that do this at the highest level. So what we pride ourselves on is being your team and bringing the power team with us. So when it comes time for you to sell your regular primary home, we have 40 agents in our arsenal that are going to take you from Bowmanville to Hamilton, that can guide you expertly through the micro market that you're involved in. If you're looking to invest in real estate, myself, Jazz, my vice president, my VP of sales, we're all here to advise you on strategy, on how to diversify, what's best for you given your current circumstances. Why? Because we've heard it and done it thousands of times. Now it's RSP season. You're going to take 20, 30, 40, 50,000, whatever the case may be. And it needs to be invested for you to stick to your tax strategy. Instead of putting it in the roller coaster ride, especially during a chaotic time like the pandemic, maybe it's time to look at some development private equity funds, some yielding private equity funds, some multifamily private equity funds. And we're bringing consistently the best people in that business for you to meet and poke holes in their game. Like nobody needs to be, sugarcoating anything. If you have real questions, put them in the chat. Cliff is here to answer them. He's here to address your concerns. You don't want to do it on the live? By all means, schedule a time. Tyler, as Jazz was just saying, will schedule a time to speak to Cliff and his team. So they're equipped to answer your questions and they're equipped to counsel you. They actually have a fiduciary duty to make sure that any money that goes into their fund is money that you can afford to put there. There is regulation that goes surrounding it. So it's not like, oh, if I call them, they're going to tell me to put my money in here. If they actually do that, they're going to be shut down. So it's not how it works. It's a suitability study. It's a professional service, and it's something that every brother and sister in the REC community owes itself to look into, whether it's Equiton or any of our other strategic partners. Take a look at the options that you have and pick what is best for you. That is what REC Brunch is all about. It's a discussion of the best in the business.
Clifford, to you, quick question. In terms of turnaround time, how long does that generally take? So if it's sitting in their bank right now, I had a question come up here. What's the turnaround time to get started with you?
Yeah, for us, it's pretty straightforward. When we have an introduction that comes to us from Tyler, we will make our best effort to get back to you within 24 hours to try to set up something. And then the paperwork can be very quick. It doesn't really take a heck of a lot of time to go through it. And as I said, we just do everything through DocuSign, so it's fairly straightforward. What is the bottleneck, if you will, and we do our best to kind of move things as fast as possible, is really the account opening is quite quick. It's the release of funds from an investor's relinquishing institution. So it is how long TD is going to take, or how long Edward Jones is going to take to release the money to us. That's really the bottleneck. We have seen it come as fast as 2 weeks.
Both of them don't want to get it moved. Both of them don't want to release it and relinquish it.
Yeah, the banks don't want to let go of the money. I don't know why. I can't understand why. But yeah, so sometimes we will stay on top of that to get that moving. I left prior to starting at Equiton. I worked at BMO, so I had some money to move over from BMO. It took me 12 weeks to get the money over, and I was a former employee. So I don't know, maybe that speaks more to me and what they thought of me leaving. But that's really the bottleneck, is creating the paperwork, getting doing the suitability study, figuring out what is the most appropriate. That we can do fairly quickly. It's the relinquishing institution that can be a pain in the butt. But if investors have money in cash in an account, that's a little bit easier. Where it can take some time, as if you got to sell your GIC or you got to sell your GameStop shares or whatever. That can kind of lead to a timing issue.
I was actually wondering who's going to drop the GameStop first. I wasn't sure when and how long it was going to take in this brunch.
Well, I didn't see what happened with it. Yeah, I didn't see what happened with it yesterday because I was off yesterday. But I know on Thursday morning it was up again. So I don't know. It's crazy. It's crazy.
I can't even.
I mean, how many boomers? How many boomers even knew what Reddit was up until a few weeks ago? And now they're all investing in GameStop.
Had a question here. What kind of statements? Is it quarterly statements, annual statements, monthly statements? So how does an insider know what's going on with their investment?
Yeah, all of our investors get access to a client portal, so they have access to quarterly statements there. But they can always reach out if they need. Quarterly statements are there, as well as annual statements and the tax slips as required. But absolutely, they can reach out at any time, and we can generate a statement for them. It's not an issue. So our traditionally the share price the new share price gets posted monthly. So that's when and we pay our distributions on the 15th of every month. So that's when people can they get to ring the register every month, basically. So some like to see it's like when when my parents would go to the bank with their book and they want to see each single line item in the book, that's why they would go to the teller. So for some investors, it's like that. They want to ring the register every month. So yeah, I'm happy to provide that information.
My mom still wants that passbook.
I have a 4-digit passbook from my first account.
Yeah. So I was in Scotia was a Scotiabank the other day, and there was an older lady in front of me, and she goes, "Can I have my bank book up?" And I literally, for the first time, saw they're like, "Unfortunately, we don't do that anymore. It's all like,
Oh no,
don't even
must
do
have,
it."
must have broken her heart.
I know.
What is
Clifford, thank you so much for joining us on Brunch
Thank
with
you.
REC this Saturday. I mean, we
My
are
pleasure.
very appreciative of your time.
Thank you.
I think you're going to be surprised with the people and the amount of people that are going to be reaching out to you. I know we were all at a investor conference this past weekend, and we had a
Yes.
blast. We met a lot of new people. A lot of them are probably watching right now, and just wanted to thank you from all of us here at REC, as well as the REC community, for your time today.
My pleasure. No, you guys have been a pleasure to deal with, and so is the rest of the REC family. So thank you guys. Have a great Saturday.
Awesome. Thank you, Cliff.
Okay. Cheers. Bye-bye.
To everyone who's still with us live, and if you're watching the recording, thank you. We appreciate you as well. We hope this was valuable and it was timely. Simos mentioned it earlier. It's very, very timely in our opinion, because you're going to be hearing the words RRSPs in the next 2-3 days. I'm sure if you turn on the TV, that's what the majority of the commercials are about. And the banks are going to try to get you to invest with them. And even if you put the money into the bank because you need to meet that deadline, there is no deadline to meet with a Clifford and an Equiton or any of our other referral sources that we can actually put you in touch with. There is no deadline for that. It's ongoing all the time. But if you want to get more information, all you got to do is send that email to info@reccanada.com. I think it was another great brunch, my friend.
good point, buddy? And I just want to expand on it, that there is no rush. So what Jazz is referring to is the only rush one has is to actually meet the deadline of getting your 2020 income to get that RSP in the bank. So get your RSP in the bank. Nobody's selling you anything. Once your RSP is in, you're going to choose it. There is no rush. So what Cliff does and what any of our other registered fund strategic partners do is once your RSP is in place, you can move a specific portion into a self-directed account where you take control of it. So don't think you're under pressure to make decisions over 2 days. You have zero pressure, and you can take all the time you need to do the due diligence required. The only thing you have to worry about, as Jazz mentioned, is actually getting your RSP in if that is a part of your tax strategy.
We will see you on Saturday, March 13th. Lucky number 13 for Jazzy. We're going to have a blast. Let us know. You have probably... There is actually a rush for something, Simos. I know you just went off on the rant and saying that there is no rush to invest in RSPs. There is a rush for everybody that's watching live right now or the recording. Put it in the comments or send an email to info. And that rush is to let us know what topics, what guests. We started this brunch today to tell you that we are experts at reverse engineering. This whole business is reverse engineered for you. So take the time today or tomorrow. By the end of the weekend, we are expecting over 100 people were watching today or close to. And if you're watching the recording, that goes to the thousands. We are hoping for at least 100 emails just to talk about what guests would you like us to bring on. We do this every other Saturday. We do it for you guys. Yeah, we have that itch that we want to scratch in terms of hearing our own voice, but we really truly do it for you guys. If you guys didn't come on every Saturday, it would just be me and Simos talking. We've been together for almost 16 years. We don't need any more talking amongst ourselves. We are happy that you guys are continue to watch and share it with your friends and family. Do us a favor, help us out. Yes, we're asking. We are asking for your help. Let us know what topics, what guests you want us to cover moving forward in 2021. This happens every other Saturday, so there's a lot of every other Saturdays left, and we need your help. We appreciate you. Simos, you want to sign it off, brother?
Just as always, blessings on blessings. It's a Saturday. You've spent it with us, so we're appreciative. Go on and do what you're passionate about. Spend some time with your loved ones. Take a rest. Go to work. Make some money. Every single person here, I just wish you the best from the bottom of my heart. Thank you for joining us. And as always, we'll see you in a couple Saturdays. Blessings.
Big shout out to everybody on the team as well in the back end. You don't get to see them, but the crew, the Stephen Rochesters, the Clem Alves, the Tyler Tai Walburn, the Laura Stewarts, and the Bobby Pumes. We love each and every one of you guys. Thank you so much.